Kate Rooney. All right, the AI boom certainly helping lift many of the big technology companies. Apple stock, Meta, Alphabet, Amazon all hit new highs on Friday, down a bit this morning. Sector is coming off fresh records. That said, our next guest says generative AI may not be ready for prime time. He says it could be a bubble. Joining us to discuss, Elevation Partners' Roger McNamee. In a recent post, I think on X, Roger, you said 4 high-value uses have emerged for generative AI: deepfake porn, disinformation, spam, and plagiarism. And everything else is a claim with limited or no evidence. Why do you believe that's the case?
Well, I just look at what's happening in the field, David. So there's a big report out Friday from Goldman Sachs in which they make the point that the amount of capital investment in this sector, which is billions of dollars now, it's so large that it's almost unimaginable that we're going to get a rate of return on it over the next few years that justifies the amount invested already, much less what they're putting in. Microsoft alone is investing, I think it's roughly $10 billion a month in new data centers, and I think the industry is putting out 15 or so a month. So we need to see a number that looks like roughly $600 million of revenue to justify the amount that's already gone in. That number comes from Sequoia Capital, the venture capital firm. And I look at this and I go, listen, we're having a mania around these stocks, and it's really fun. It's very, very profitable. The thing everybody needs to pay attention to is that we're making assumptions about what this technology can do that we haven't proven yet. And as a consequence, we're applying it in places where it may not work. And if that's true, then the mania is going to come to an end. And the largest stocks in the S&P 500 are all going to be very heavily affected. And I just think every investor needs to take a moment and ask themselves how much longer they want to be on this ride and whether there is any evidence that the products are actually going to deliver value at a large enough scale to justify the investment we've already made, much less the investment that we're planning over the next year.
I get it, Roger, but I'll come back to a period you and I both remember well, which is the mid-90s and the hopes around the internet. There were assumptions being made then that were not proven to be true in the near term, certainly. There was an enormous amount of capital that went into companies that ultimately went bankrupt. That said, many of the things ultimately that came out of it were, in fact, what was talked about. It just may have taken longer, and the returns may not have been there for so many of these companies that went bankrupt. But others, like Amazon, are certainly great beneficiaries of that period.
David, the beauty of being our age is that we remember the fundamental truth about American culture. America loves financial manias in a way that really no other country in the world does. And we've been blessed over the years by having manias followed by train wrecks. Yet from that train wreck has consistently emerged something of great value. And I absolutely believe that's possible here too. The one point I would make, though, is we're up on a giant spike. And when you're up on the giant spike, you have to remember that the valley that follows may not, in fact, favor the companies that you're in. And so you just want to be prepared for the possibility that this could be disrupted and that it may take a lot longer, and that the thing that comes out the backside may be different than what you're looking at today, which means different winners, different use cases, and all of that.
Roger, I wonder if you were encouraged at all by this journal piece about small language models and medium language models, more slimmed down models that are looking not to answer everything in the world, but more specific tasks. Is that rationality in progress?
Absolutely, Carl. In fact, I think this is the path forward. When we look back at the previous generation of technology, predictive AI, the key thing there, when you see stuff like protein folding or language translation, where you have actually seen successful use cases, in both of those cases, the data sets that they were working from were highly focused, incredibly tightly curated. And I think that is the path forward. The thing that we're looking at today is that OpenAI and Microsoft as a team, Google, Amazon, Meta, all of the big companies are looking to have a global monopoly. And the only way to do that is to boil the ocean, to sit there and make the argument that if you gather all the world's data, you process it all into one giant training set, and then from that, you use generative AI in your LLM to produce the answers people are looking for. That hypothesis, I think we can safely say today, is at best flawed. It may be complete baloney. But the thing about small language models, the thing about tightly focused, narrow stuff, is that there are a lot of use cases where that already works. And so in my mind, going that way, seeing thousands of different AIs, each targeting something very specific with a data set that's not stolen from the people who created it, but actually built by people who are domain experts from their own data or from data they legitimately license, I think that's incredibly exciting. And if the world went there, I would be very optimistic. The problem is, what do you do with all the investment that we've already made that's on the assumption that the language
Roger,
model
where do you think is the most overvalued and overhyped part? Because the semiconductors are, I mean, that's resulting in earnings, right, and orders. Or you think it's the hyperscalers that are spending so much?
The way I look at this is that the orders that you're seeing for semiconductors today are based on a set of assumptions that I think are dubious. So I worry that you're going to see future revenues for a period of time that will be lower than current revenues. That would be my fear for NVIDIA and the other semiconductor companies. Now, the folks who are producing the data centers have a really interesting set of problems, because what if it turns out that the architecture that they're deploying from the perspective of semiconductors doesn't actually match the need of what people are going to need with these smaller language models, or whatever it is that emerges as a winner? You know, that's the real problem, that we're investing a ton of money in something that may be a technological or architectural dead end. And it wouldn't be the first time we've done that. And it's not the end of the world, but we're talking tens of billions of dollars being spent every month. And
we are, but we're also talking about the biggest companies in the world spending it. I mean, those who can at least ostensibly afford it.
Definitely.
To your point, they may not get a return on that capital, but nobody's going to be talking about them being in any sort of financial danger.
Exactly correct, David. In fact, that's what makes this whole thing so interesting, right? Is that these companies, which have been like the Federal Reserve in terms of the amount of cash that they have, are spending it with a level of intensity that's actually shrinking the numbers that they have. They're spending the money faster than they're bringing it in. And that produces, I think, an issue for investors if it turns out that these investments they're making today aren't going to pan out. And again, Goldman Sachs is raising this as an issue. I believe Barclays has raised it as an issue. The venture capital firm of Sequoia Capital has raised it as an issue. I've raised it as an issue. Others have raised it. You know, that doesn't mean we're right. But I do think if you're an investor in these things, it's a question you should be asking. And you know, you should be looking for a safe place to land just in case. And, you know, again, we've all seen this movie before. And it doesn't have to end like, you know, it doesn't have to end in a shootout. It can actually end, you know, going to the hospital and getting well again.
Okay. The always thought-provoking Roger McNamee. Roger, thank you.
My pleasure.